The stock market obviously dipped today. Let's go over what happened and what I'm doing next. So pretty much fewer people than expected filed for unemployment, which sounds like a good thing, but that means the economy is still hot, so it lowers our chances for rate cuts coming up. Typically, when looking for a rate cut, we're looking for a higher unemployment rate. Now, combining that with Powell not hinting at any more potential rate cuts this year caused a bearish reaction. For those of you who don't understand, rate cuts are when the Fed decides to lower interest rates. Typically, when interest rates are cut, stocks have better valuations. This is especially true for growth and tech names, as they have to borrow less money and their valuations, again, just look much more attractive. And often what we'll see when we aren't expecting interest rate cuts and valuations aren't looking as good, a lot of investors will like to lock in profits. So right now we are seeing a bit of a sell-off, which of course obviously is going to affect the markets in a negative way in the short term. So what am I doing with my portfolio in the short term and long term as a result of this? So over the next few days, I'm just going to watch the market, see where it heads, see if this is more of like a short-term dip or if I think this can turn into something bigger. At this exact moment, I am not buying the dip as I just want to get more clarity on where we're headed over the next few months. Aside from that, also with a long-term focus, as you can see, I am currently building up my cash position. I want to get this to at least 20% so I am able to take full advantage of when a market crash or at least big pullback eventually does come, which it will at some point. Many things in the market as of right now are clearly just very highly valued. I'd be very surprised if we don't see any type of pullback over the next 12 months. So I am going to be ready for that, but at the same time, I'm not timing the market because, so many people have said this over the past 2 years and I would have missed out on a ton of gains. So I'm continuing my dollar cost averaging, just letting that go, but not throwing cash in at this exact moment. Overall though, just market dips are normal. This is nothing to be freaking out about. Like, this is just part of what happens in the market. Not every single day is going to be a beautiful green day.